Nvidia is heading to an unbelievable price target by the end of 2024. Stay with me until the end of the video to find out why. Accelerated computing and generative artificial intelligence, both trends. While it's often viewed as a parvenu, I prefer to think of Nvidia as a mainstay, a company that's been lauding, I've been lauding it for over a decade. By the way, wherever I go, people thank me for recommending it. I say you are welcome, but the honors go to Jensen Huang, the redoubtable CEO, whom I frankly have almost run out of superlatives when describing him. Oh boy, if they do the same thing in the third quarter, I better come up with some. Remember when you used to have the thoracus? I know going into this quarter, there was a widely held belief that Nvidia stock had moved too much and it was time for some ka-ching, profiting.
Jim Cramer is predicting that Nvidia is on track for an extraordinary price target by the end of 2024. He emphasizes that Nvidia's remarkable success is not just a fleeting trend but a result of its dominant position in accelerating computing and AI technologies. Cramer highlights Nvidia's CEO, Jensen Huang, as a key driver behind the company's impressive trajectory, noting Huang's relentless efforts and significant contributions to Nvidia's growth. Despite widespread speculation that Nvidia's stock might be overvalued and due for profit-taking, Cramer advises holding on to Nvidia rather than trading it. He believes Nvidia's role in leading the current industrial revolution and its substantial 37% growth in the second quarter support a continued bullish outlook. Cramer also addresses the anticipated earnings report and the potential for volatility. He mentions that despite concerns, Nvidia is likely to meet expectations due to its ongoing innovation and the strong demand for AI and data center technologies. He draws attention to the broader tech sector's spending trends, noting that companies like Microsoft and Alphabet are heavily investing in AI infrastructure, which indirectly benefits Nvidia. Cramer argues that Nvidia's consistent visibility and high engagement, including its CEO's frequent public appearances, are indicators of a company that remains confident and well-positioned, rather than one on the brink of disappointment. In terms of market expectations, Cramer points out that Wall Street analysts have set high price targets for Nvidia, with potential upside ranging from 20% to 60%. He acknowledges that while Nvidia's earnings growth has slowed, the company's innovations and strategic positioning make it a standout player in the tech market. He also notes that Nvidia's GPUs, once pivotal to Tesla's technology, have become highly sought-after collector's items, further underscoring Nvidia's significant impact. Cramer advises investors to act quickly if they are interested in acquiring Nvidia's stock, as the limited availability and high demand could drive prices even higher.
I heard that several times a day this week on our network. You know me? I say own Nvidia, don't trade it, because despite its $3 trillion market cap, I think Nvidia is unrivaled in its ability to usher in this new industrial revolution that Jensen has explained to us many times. And that's why it rallied almost 37% in the second quarter alone.
Nvidia is coming up next week. Josh, you talked about it just a bit earlier in the show. We're going to show a graphic right here just to remind people, we don't talk about Nvidia as much as we once were talking about it.
Thank
but
God.
Heavy weighting in the S&P, heavy weighting in the NASDAQ 100. Talk to our data team. They say implied volatilities 10% to the upside or downside after earnings. Anastasia, I want to come over to you. Could this be the cause of the volatility that a lot of people are looking at? This earnings report coming up, are you concerned about this and how it might impact the market?
Well, it's obviously an important one for the market, but I'm not overly concerned about it because I have a hard time believing that a company like Nvidia does not deliver, given everything else that we've heard from Meta and Amazon and others. And what I mean specifically by that is that despite whether those companies right now can monetize AI or not, they're investing in it. They're investing in data centers. They're investing in some of those data center chips. So I think the CapEx cycle is very much alive and well and is being upgraded for 2024 and also 2025. So that, of course, is going to benefit a company like Nvidia. But it would also broaden this out. This morning, or overnight, I should say, we had a constructive earnings report from Analog Devices. And what I really picked up there is that they're really seeing this trough in industrial and auto end markets. And they're seeing orders that are picking up. So if you take the AI sentiment that is positive and you couple that with a potential trough in cyclical semiconductors, I think that really solidifies what investors should continue to pay attention to this space. And by the way, we're talking about getting back to that all-time high on the S&P. The SOX index, the semiconductors, is still about 10% off the all-time high.
I have a little bit of an unofficial indicator for situations like this that I'd like to share with the audience.
Unofficial, though.
Jensen Huang does not stop doing podcasts. He just did one for Stanford the week before. He did a live thing with Mark Zuckerberg at his own conference. CEOs who are on pace to miss expectations are not hanging out on podcasts like Joe Rogan. So I don't know how you quantify this, but he doesn't stop talking. And so I don't know if it's another drop the mic quarter because the expectations are really high, but it would be hard for me to picture this being a bomb. And by the way, of all the Mag 7 names, I think it's the number 1 or number 2 closest to its record highs. The problem is expecting revenue of $28.6 billion, which would be 112% year-over-year growth, earnings 64 cents, which would be 137% year-over-year growth. These are really incredible growth rates to sustain when you're already the 3rd largest market cap on Earth. So the expectations are high, but the man is out and about. He's not like wearing sunglasses, you know, in a motel room somewhere like Ben Affleck. He is on the scene, and you're not doing that if you're about to shock people to the down. You're just not.
While we're using alternative data, if he switches from leather jacket to jean jacket, what does that mean?
It means he's a certified gangster. What else do you want me to say?
By the way, Nvidia shares down 1.5%. As Josh was actually talking, the shares have bounced just a bit. That's interesting.
That's my indicator, Frank.
That's
the power of the indicator.
And this is the opposite story we've been seeing from big tech. Microsoft, Google, and Amazon. Those shares were largely punished after earnings because they said CapEx is going to increase to build out their AI ambitions. Apple is the outlier of the group, though, spending relatively little, about 2.5% of sales, according to MoffettNathanson. And that's compared to its peers, of course, spending a lot more than that. We're just going to see how that CapEx picture really impacts, because Nvidia is the one.
That's the main event.
That is the one anyone really cares
everybody
about.
wants to know about that.
And they're the beneficiary of all this CapEx.
I wonder, so if we talk about the way that maybe investors are viewing the overall CapEx picture, is it about now this growth slash, you know, investing balance that tech has had to strike because of artificial intelligence? Or is it a focus now more, Pippa, I guess, on your side of things, about this idea that if they are spending, it is because they have a reason to, and they need to grow, and that's the reason why we're doing it on the old world value side of the equation?
I think that's it, that we've seen so much momentum and this already, you know, being priced in, kind of the upside from AI, but that's still further down the line. And in some cases, it's almost putting the cart before the horse, because you have to actually build it out first. And there's been so much interest in the cloud and tech and AI, but what about the stuff that actually makes all of that run? And so that's what Bank of America is saying, and others as well, that you have to focus on the companies that provide the materials, the cement, the wiring, the cooling infrastructure, HVAC. Yeah, all these very unsexy areas, but they're the ones that actually make it come to life. And those areas of the market have been overlooked amid this big boom in tech investing.
I just wonder, Stephen, maybe you can add some color to this or not, but all of this is with this idea that there's going to be a massive payoff waiting for these investments. And
exactly.
As people become like, wait, well, what is Microsoft's uptake of these?
That is exactly, and that is the big question. We heard it again and again on these earnings calls this entire season. Okay, you're spending these enormous amounts of money, you know, $19, $20 billion a quarter on capital expenditures. When are we going to see a return? When are we going to see revenue growth? The answer from pretty much everyone is we don't know, but we know the demand just keeps accelerating. In Microsoft's case, they say we literally can't keep up with it. We just don't. They're offloading stuff to Oracle now because they just don't have the capacity to do it. Yeah, so
that's incredible.
So the demand truly is there. You talk about the cart before the horse. I mean, it's already there. Yeah. Like, they don't need to even worry about that. They don't have to prepare for anything. It's here. It's happening. That's what they keep saying. I'll go back to what Alphabet CEO Sundar Pichai said. He said he'd rather overspend than underspend. He'd rather make the mistake and spend too much on all this because of all the demand they're seeing. So it's a very different story than what you typically see.
You know what they called that back in the day? They used to call it, well, it's not just that. They used to call it the field of dreams trade. Which is
really?
That if you build it, they will come. That's the whole idea.
But it's already coming, I think, is what we're hearing. It's not hoping they'll come. It's kind of already
But for AI, it's whether or not you hope they will come after the AI has been put in place and all the infrastructure is built out. And that's the whole idea behind why you have to spend on that.
And Pichai's argument is, hey, if I overspend on all this stuff, there are other things we can use that infrastructure for. He didn't really say what, but there's,
it won't go to waste.
It won't go to waste, is what he's saying.
Nvidia, the undisputed king of AI and high-performance computing, is on the cusp of something huge. Their latest AI breakthroughs are game changers, and the demand for their powerful GPUs is through the roof. Let's talk numbers. Wall Street analysts are already buzzing with price targets ranging from $150 to $200 per share. That's a potential upside of 20% to 60% from where we are now. And that's just the short-term picture.
The last 2 days, it's been very, very toppy. Nvidia is the same thing. There's your market leader. It was 105. It went to 130 in 8 trading days. That's topped out in the last 2 days. You see it moving to the downside again.
What do you make of the fact that we're going into next week where volume arguably will still be light and such large tech catalysts like Nvidia and Dell?
Nvidia, that will move the market on Wednesday when we get Nvidia. But remember, the numbers we know about Nvidia, their earnings acceleration have been slowing down now for a whole year. We know their earnings are going to be great. They're just not growing as fast as they used to be. They have to find another reason to re-accelerate their earnings growth. I don't know what it's going to be, but the street will be surprised if they dramatically raise their numbers. That'll move it to the upside.
In conclusion, Nvidia's trajectory towards an unprecedented price target by the end of 2024 is largely driven by its pivotal role in the accelerated computing and artificial intelligence sectors. Despite some skepticism about potential profit-taking, Nvidia remains a formidable player in this new industrial revolution. The company's impressive growth, illustrated by a nearly 37% increase in the second quarter alone, reinforces its dominance and potential for continued success. With significant investments in AI and data centers from major tech companies, Nvidia stands to benefit immensely, despite a $3 trillion market cap. The current market anticipation reflects this optimism, with analysts projecting substantial upside potential for Nvidia's stock. Looking forward, what do you think will be the key factors influencing Nvidia's stock performance in the coming quarters? How do you anticipate the broader tech sector's capital expenditures will impact Nvidia's growth and market position?